Hi guys, this is Mentor Chris with the Trading Dojo. Today I'll be covering how I achieved $2.5 million in funding, $1.5 million from Apex, and $1 million from other prop firms, using a simple concept known as the power of 3. However, instead of using the daily chart, we will be using the hourly chart to determine our expansion. This means we will only be focused on 1 to 2 hours of trading in a single day. If that isn't freedom, then I don't know what is. Now, this will be primarily focused on indices. However, this can be used on any asset. The concept is simple. We're simply waiting for the 10 a.m. to 11 a.m. silver bullet time, and we're going to anticipate where the hourly candle is going to expand to. So in this case, we're waiting for the 10 a.m. candle to open, and then we're going to see where is it going to close. So letting price play out. Okay, here's our open. And just like a daily candle, we're going to have a open, which is this time, and then we're going to have a wick. It's going to look like this, right? However much lower we're going to trade to, right? And then we're going to expect to expand past that, right? So if we're taking sell side, most of the time we're going to be taking one side, and then we're going to trade to the opposite side when we're trading silver bullet. That's just how indices move. It's going to purge one side and then revert to the other side. So waiting for that sweep. Okay, so we swept down here. And our open was down here. We wicked down here. And then we want our candle to turn green. So we're expecting us to go to that open and go past it. So any trade down here is a good trade because we're getting in on a wick of a higher time frame candle. If we're trading in this hour, then we need to forget about the noise and figure out simply where is the hourly candle headed to. So looking at that lower time frame, this would have been our entry right here after we swept sell side, and we're trading inside of that wick of that hourly candle. And I'll show you the actual hourly candle, what it looks like right now. But this is kind of the idea, and we want us to trade all the way through up here to our highs. So going to the actual hourly candle. So we came down, we swept this low. So at one point, the candle looked like this, down. So it looked extremely bearish. It came down and swept this low, but we know that that hourly candle is likely to trade back up towards these highs. These were the highs that we had marked out, right? So that 10 a.m. candle, let's say we were in there from 10 to 11. Okay, well, it closed, but we're still targeting that high. So from 11 to 12, we're expecting this to be our swing point. So our swing low, and then we're going to have our expansion through our target. And one last thing I forgot to mention is how we know we're going to get that continuation is based off of this. So we clearly respected this fair value gap. So remember, bodies tell the story and wicks do the damage. So all we did is come down to sweep this low, but the market already had it planned that we were going to trade higher to and through these highs using this 11 to 12 a.m. candle continuation. So most of the time our entry is going to be from that 10 to 11. However, if we're going to see continuation, we want to see some kind of candle confirmation through the 11 to 12, and that came in the form of this fair value gap. Now, just one final example. So on this day, we ended up taking buy side over here, and then we had some sell side targets. And if you look at the 10 a.m. candle, so we opened right here, our high came up into this fair value gap, and then we traded down lower to our targets, and our 11 a.m. close was right here. So that would have looked like this if we took a trade. towards our targets. And then we likely saw 11 a.m. continue lower. Kind of like what I said before, 10 to 11 is going to be your entry time. And then you might see continuation going into 11 to 12. So this is what it looks like on the hourly chart. Let me get rid of all of this. So this is the same thing we just looked at, highs taken. We have some lows down here that we are watching. So if we anticipate for the candle to be bearish here, the next 10 a.m. candle to open, it's going to trade up higher. It's going to create a wick, and we're going to anticipate that it's going to trade lower. So we want to be getting in around that wick, around that open, right? So let's see how it looks. So yeah, very simple. It wicks out on top, and then we see continuation going into 11 to 12. So that's our power of 3 on our hourly chart. This is going to work great on red folder days for indices. We're going to see the most amount of movement during these days. And if we could find that 10 to 11 a.m. expansion where it's going to, that could feed your family, that could pay your bills, that could get you funded. So this is what you should be focused on when you're focused on Silver Bullet this hour and figuring out how you're going to master that expansion. If you liked the video, please hit the subscribe button, and I'll see you later.